All right, good morning. Today is October 23rd, 2024. It's Halloween's a week from tomorrow, and I'm going to do another 30-minute live show. I like to keep these things relatively short just because everybody's attention span is decreased over the years. I know mine has. So I've talked about this before. If I spend a lot of time at YouTube watching different videos, and I'm hesitant to watch anything that's honestly, for me, the shorter the better. But, I can talk a lot. We used to do these shows, geez, for an hour, 2 hours, that type of thing. And so I try and keep them at 30 minutes here. Just touch on the basic stuff. And so let's dive right into it. The market, well, there's including today, there's 7 trading days left in October. And boy, time sure flies, especially when you get old like I am, right? So it's been kind of a dull week, honestly, and we're going to look at the weekly chart of the S&P here in a second, but I've been trying to start the show with some interesting sort of macro looks at the market, and let's jump right into that because I found a chart this morning that I thought was pretty interesting. Whoops. Oh boy. Let's see. I just accidentally. Oh, there we go. Well, we're not going to look at the chart. But anyway, I accidentally closed the chart window that I had open, so I'm not going to try and find it again. Basically, the past couple of weeks we looked at the Buffett indicator, which is showing the Wilshire 5000 compared to the GDP. Is Wilshire 5000 is like 200% of GDP, right? So the Buffett indicator is at all-time historical highs, and you can take that with a grain of salt because, whatever. But the chart that I had, and I mean, you can imagine this without seeing it, but the price to sales ratio on the S&P is the highest since like 2008. And so that's just another sort of indicator that the market is potentially overvalued, right? Um, the thing about the market being overvalued, that's sort of a subjective description. However, like I said last week, the market's got more stats than Major League Baseball, and so statistically speaking, if the price to sales ratio is at, a 10-year high, and the Buffett indicator is at an all-time high, and the market itself is at an all-time high, right? Then it sort of makes sense that right now might be a decent time to be a little bit cautious. And the other thing I was going to look at was the graph that I had of seasonality, which shows that the last couple of weeks of October are typically flat. And then, of course, as we know, November is always a great, I shouldn't say always, but November is seasonally a really good week, a really good month for the market. So the last couple of months, the market usually does pretty good. Of course, things get really dull around the holidays. Every year, right around Christmas time, between Christmas and New Year's, the market's pretty much dull. The participation's low. It's choppy. There's lots of random, just intraday price movements. But what we're looking at here is the weekly chart of the S&P 500, and I've just got a couple of trend lines drawn. I got a big support level from way back here. I haven't actually drawn. There's another big support level right here. I might as well put that on my weekly chart because I have it on the daily chart. Right? I got that sort of support level right there, and I'll be honest with you, the market kind of looks like, I like to start on the weekly view here, but the market kind of looks like it wants to have a little bit of a pullback here, a little bit of a dip. In a weekly chart, I mean, obviously, hey, the market's at all-time highs. Um, I read another statistic earlier in the week, I believe, that said something to the effect of the Magnificent Seven stocks are 36% of the S&P 500, which is pretty incredible. And that was another that's another statistic that, is at a record high since the last time that something bad happened. Right? And so the people that put out these different statistics, the funny thing is, I follow a couple of accounts that can basically prove, basically statistically lean towards the fact that the market always does great when, this or that happens. And then I follow other accounts that put out a bunch of statistics that say, hey, this market is extremely overvalued, and I have a chart somewhere. I'll bring this next week. It's like 100-year chart, and it's showing like a big channel on the S&P, and the market itself is right up against the top of the 100-year channel that goes back to like 20, the 1920s or whatever. But the idea of it is that the last time that the market hit the upper end of that channel was like 2008 and I believe it was 2020 or whatever. But it's just kind of funny because you look at that chart and it's pretty scary. And you look at the Buffett indicator, it's a little bit scary. You think about the price to sales ratio on the S&P being, extremely overvalued, so to speak, and so yeah, I mean the market's extended, and it seems like miraculously, and this has a lot to do with what I just mentioned a minute ago, is the fact that these Magnificent Seven stocks are the majority of the market. And so obviously under the surface, things, may or may not be so great. But when you have a handful of stocks holding the market up like that, and of course, these are, I'm not going to say monopoly, but they're kind of like monopoly type stocks, right? And I don't get a whole lot into fundamentals. I think that basically just about everything you need to know is on the charts. So when I was looking at this earlier, right, this is a weekly chart, right? Today's only, there's only a couple of days into the week here. I was noticing that this is an inside candle, right? Like this week so far is inside this other one. But look at this. Prior to right now, we've had 2, 4, 6 weeks in a row up. So kind of looks like, and let me pop over to the daily chart now, because the daily chart, the past few days, there's Friday, right? I remember we talked about this, like back here. This I guess this was last week. This bearish engulfing candle, this outside reversal candle. We talked about the similarities between these other ones, where the market actually like rallied for the next few days and then rolled over, right? Remember that? And so we get the same sort of thing here. We had the bearish reversal candle, and then the next couple of days, and the funny thing is that this day, and this would have been, so today's Wednesday, that would have been Thursday. So we had Tuesday, we had the big red candle here, and then I did the show here and talked about the last times that we had this, like here. And even over here, right? Like the next couple days, the market didn't break below the low of the bearish reversal candle. Well, on Thursday, we actually had a gap up to new all-time highs, and then sold off and closed that gap the rest of the session. And then you can see the past few days here. Friday was just a nothing inside day, super narrow range. The volume's been kind of low, and I mean, the market's just been kind of dull, honestly. And I don't know what to make of that, because typically this time of year there's a lot of action. So going back to that weekly chart, let me touch on something else here that I had noticed. Look at how last week and even this week, how narrow these ranges are, right? It's like the market has reached a permanently high plateau. But, you know, when we see these long range weekly candles, that's when we get some action, you know. And I don't care if it's up or down, but these past couple of weeks are just sort of dull, right? And a few weeks ago, you know, it was a fairly decent, maybe an average range candle. The prior 2 weeks, the end of September were kind of narrow. So, you know, the election's coming up in just a couple of weeks, and that's kind of interesting. And also we have everything's just kind of seems like it's in limbo. You know, there's a lot of weird stuff going on. People are focused on the election, not me. I'm trying to avoid politics as much as possible. Something to notice here on this chart is the MACD. As we speak here, and I'm back on the daily chart, this MACD is starting to go negative here, right? You can just barely see that blip there, and of course you can see the MACD lines crossing to the downside here. Um, no huge reason to panic at this point because they're actually kind of flat, which is interesting. If you look at this last little, you know, if you can even call that a dip, right? What was that, like about 50 S&P points, maybe a little bit more? I mean, that was barely even a dip, and you can see how the MACD kind of crossed to the downside briefly, and then basically just turned around. So it wasn't well so far. I mean, if you look at some of these other crosses, it's kind of the angle of attack on the line that crosses is interesting to note. You can see over here there was a huge rally, and the two moving averages that are used in the MACD were spread apart a lot there, and even here, right, when they crossed. But with them being so flat like this, I'm not sure that it means a whole lot. You can look back over here and see that, you know, there was a couple of dips, little dips along the way, but it even crossed here, you know, just briefly, kind of like almost looks similar to what it is now back in the summer when the market was just essentially going sideways. So it's we're kind of in limbo here, right? Now there's a couple of things that we can look at. Speaking of overvalued, what I was mentioning a minute ago, basically, you know, it feels to me like this is the kind of market that you just kind of want to. I wouldn't be loading the boat here. I wouldn't, you know, as an investor, I don't think it's a good time to be a buyer. I'm gonna draw a little I'm gonna draw a little Darvis box right here, just across the last, you know, this last little bit of price action that we have here. I might as well save that. I could also draw a trend line down across the highs of the prior 4 days. That's something to watch. And so we're getting like a little, you know, consolidation here. That doesn't mean that, let me zoom back out on this. That doesn't mean that the market can't, you know, consolidate here and then bust out to the upside. However, there's a few things that are going on here that I'm sure you're probably aware of, but I should mention the 10-year yield, right? And I just happen to have this in my watch list. The TNX is basically the yield on the 10-year Treasury note, and as we know, when interest rates are going up, that's typically not good for the market. And the crazy thing is that everybody's talking about how the Fed cut rates 50 basis points, but yet interest rates are going up. And that's a little bit of a head scratcher, and I'm sure I no longer listen to CNBC. I turn it on and I mute it, and that's about it. So I listen to very, very few. I go all week and maybe unmute it like for a couple of times if I see someone on there that I think is interesting or a conversation I find interesting. But I pretty much avoid it these days. But my point was is that I'm sure there's been a lot of discussion on CNBC amongst the talking heads about why interest rates are going up when the Fed's cutting rates. And of course, everybody's concerned about what they're actually going to do here in November. Like whether they're going to cut again, whether they're going to cut 25 or 50, or whether they're going to hold. So it seems to me that everything's just really kind of in a state of flux because the jobs numbers were good, but inflation could potentially be ticking up. The inflation numbers, this core CPI last time was a little bit hotter than expected. And so the Fed's really kind of, they're kind of painted in a corner because if they keep cutting rates, or if they, cut another time and inflation starts picking up, which it may already have, then they're going to have made a policy error, which basically, as far back as I can remember, everything that they've done is a policy error, to be honest with you, if you really think about it. The biggest policy error that they made was creating like $7 trillion out of thin air during the pandemic, which resulted in the inflation we've experienced. And let's look at the VIX here. I remember this just for the fun of it. And the VIX is not really, I'll be honest with you, the VIX over the years seems to me that it's kind of lost its luster as far as being able to figure, as being a useful indicator. There's a train of thought, or there's a camp out there that says that the VIX itself is manipulated in order to manipulate the market. But so you got the VIX at 18 something. Typically anything over 20 you can expect some volatility. You remember this crazy spike in August, and nobody could really figure out what it was all about, and it was, theoretically it was some kind of warning sign, and nothing really happened, right? So, I mean, look at that. So let's, this is a daily chart of the VIX, and so let's go back and look at the S&P right there in August, just for the fun of it, to see, So I guess this was the big VIX spike here. And of course the market did tank for a few days here, but it's extremely uncharacteristic for the VIX to spike like that. Just based on, a sell-off like that. I mean, that VIX spike was just crazy. Every time that I move this chart, it wants me to have to resave it. It's very annoying. Oil is, there's a weekly chart of oil. Each one of these charts that I have in my list here, I have to make sure I should probably pull that down. That's interesting. I just noticed that like on the show here, yeah, look at that. It might actually make more sense to, might make more sense. There we go. Let me do this real quick here to adjust my screen, because it just now occurred to me. I'd hate to think on all the prior shows that you guys weren't able to tell whether I was on a daily or weekly chart. It's funny because that's why I just mentioned it. Okay, so we'll go back to the SPX here that we were looking at earlier. Yeah, and so it makes sense. I'll remember this for next week. And look at this one. Now it says not saved. See, that's so annoying. If I don't resave the chart, if I try to switch to something else, it'll pop up a little box asking me to save it. So Weekly chart looks a little vulnerable, like potentially we could get a little bit of a pullback, but you never know. It's like there's some invisible magical bid under this market for some reason, and every day it feels like, it wants to sell off. And what we've seen lately, and let me go back to the daily chart here, even over and look at this, it says not saved again. I don't understand that, but there's been this weird sort of behavior that the market opens up in the morning and it's weak. All right, it's like weak in the morning, looks like it's going to sell off, and then an hour or two into the session, then all of a sudden there's a bid and it rallies back up. So it's a little bit unusual, to be honest with you, but I've noticed that. And so, we get these days where the market opens, it sells off. Look at Monday. That was a good example. Monday, the market opened, it sold off fairly significantly, and then midday turned around and rallied almost all the way back up. And then, yesterday was a little bit different. Yesterday was kind of a dull day, but look at this narrow range we got working so far this morning too. Um, the market's just kind of consolidating. It consolidates and then it makes a move in one direction. Turns around, makes a move in another direction. Consolidates and then makes a move. So that's why I drew this box here, because we're kind of looking for, and actually the bottom of that box is support and the top of it is resistance. And so it's going to be interesting to see what happens. And there's a couple of ways to look at that too. And this is what makes everything so tough. So there's participants that are looking for the price to break out of the bottom of the box to sell, and there's participants that are looking for the price to test the bottom of the box, and that's where they start buying because they're buying support. And so the latest sort of flavor of that is other participants that wait for the price to act like it's breaking down, right? Kind of make a fake out breakdown, and then they start buying because they figure it's going to rally back up. And then if it doesn't, what happens is that's when you get a real sell off because they get stopped out. So well, that's what makes a market, right? Theoretically, I'm old school, and rather than buying this support, rather than start buying here, if it started breaking down, I'd honestly look for a little bit of a dip, So, and then of course you've probably got lots of participants that are short with stops right up here at the high. So if some sort of news were to come out that was really bullish for the market, or like maybe interest rates started falling again for whatever reason, I've seen a few people comment that based on the fairly rapid rise recently in interest rates, that this market should be selling off a lot more than it is. So that's kind of interesting too. I wanted to so we looked at the VIX, we looked at the TNX. We could look at a few stocks on my watch list here. We're right in the thick of earnings season. It's Apple's earnings are coming out 10/31 on Halloween after the market close. Well, that's interesting. Halloween is, like I said, a week from tomorrow. And look at this pattern. This is a weekly chart of Apple. And boy, it's this was, I don't even remember what this news was. Was this the Apple event or something? That's just a really unusual weekly candle. You talk about stopping out some folks. That's what happens on something like that. But that huge weekly gap down. Geez, I don't even remember too much about that. Let's look at ARK here. Let's look at ARK, which is also, and so up at the top of my screen, I'm going to remember this going forward to have the weekly, would have it displayed so you guys can see whether it's a weekly or a daily chart. This is so funny. Look at ARK. It's just going sideways here for the longest time. I started this box back in the spring of 2022, and it's just basically encompassing all the price action. And yeah, so right now ARK is just trapped between 40 and 50. Um, Since summertime, it's made an excursion below 40 and it poked at 50. But look at even prior to that, almost all spring and summer just trapped in this narrow range. It's just kind of interesting to look at. I don't really need to, but I could just extend that box over to the right. I think I've actually have extended it a couple of times. So that gives you just a little bit of perspective on, the fact that the markets, or, the type of stocks that she is trading. And I mean, it's crazy activity. They publish all their trades on a daily basis. And so, yeah, I don't know what to make of that, because, well, that's a whole nother conversation. This is an interesting stock here, this ASTS. I think this is a daily chart. Somewhere back here we talked about this I believe it was prior to it breaking out of here. You can see it broke out. We were looking at it back over here, I believe it was. It's been a couple of weeks ago. It actually, broke out over, made that little sort of W, broke over the 50, got a little bit of traction, and now it's kind of coming back in. So it's going to be interesting to see. It's going to be interesting to see what it does from here, because it's basically sitting right on this support. So I'm looking. I have pared my watch list down to almost nothing, because my new MO is just to type the ticker symbols I want to look at into. I just type them in up here. I put it on a candlestick daily or weekly chart. I just type it in, and that's much easier than having like a big watch list of stocks that I may or may not follow. This is kind of interesting. Alibaba going into the year was kind of one of the favorites for, I would say, a recovery, something like that. This is a weekly chart, by the way. And of course, a few weeks back, or this is a weekly chart, last month, China had this big stimulus and their market just exploded to the upside based on their stimulus. And this thing was up like 30 something percent here. I think their market was up like 30 something percent, but it made a huge move, and now it's kind of coming back in. And this little pattern here is sort of reminiscent of this one, back at the beginning of 2023, where you had like this big sort of run up out of nowhere for a couple of weeks, and then it just basically fizzled right back to where it came from. So that's kind of interesting to look at. Let's see what else I got in here. Let's look at Google, one of the Magnificent Seven. Actually talked about Google last week, and maybe a couple of weeks ago when I drew this. Let me just extend this out. There we go. I don't want to mess it up, but there we go. So I'm going to extend that out. I'm going to save the thing real quick. And interestingly enough, this is kind of an interesting looking sort of inverse head and shoulders type of pattern. It's actually as a pretty constructive pattern if the price busts through 170. Now, of course, they've got some things hanging over their head, and quite frankly, there's two ways of looking at it. There's the strictly objective technical analysis way, and then there's the fundamental way. We're thinking about Google's business, and quite honestly, and the problems they have, like the Department of Justice and all that kind of stuff, and the fact that they could get broken up and all that good stuff. But anyway, this is a pretty constructive looking chart down the road if it busts out of here. So real quick, running out of time here. IWM, This is kind of interesting because IWM's, really close to, well, there's the all-time highs, right? And a lot of time has gone by. All these years later, so you got this big, gigantic cup that's formed, and it's just zigging and zagging in this same sort of range. It poked up here, kind of double toppy, right? This is a daily chart. Let me flip this over to a weekly just to see what it looks like here. So this is kind of interesting. Oh, geez. It's a big, gigantic cup. We'll see what it does as far as forming a handle here, right? This chart looks like, it looks like a heart attack. The way it just zigs and zags up and down. And, and especially these ranges here. This was crazy between 2022 and 2024. 2022 and 2023. These couple of years here on this weekly chart where it just made a run for the support and then up the resistance and down the support and up the resistance. And so what I was talking about a couple of minutes ago on the S&P, something like this after a couple of times of this third one here was practically a gimme as far as buying support and or selling resistance. So it's kind of interesting, but it's in the same sort of boat now, right? You got, we're up near the resistance area, and of course this week is red so far, but yeah, this is super interesting. So we're gonna see if it comes down and tests the bottom of this. Oh jeez. See, that's what I was talking about. So there's Nvidia. Back here we drew a couple of drew this big sort of triangle here, and as you can see, busted out. And this, of course, is the market. I noticed it was down a little bit this morning, and now it's trying to recover. And last but not least, let's look at Microsoft, because Microsoft's in a really super interesting spot. This week I adjusted this lower trend line. I had it a little using this candle, but at this point, I don't think that particular candle really is relevant anymore. So I basically adjusted the lower trend line here, and it's kind of interesting because Microsoft, you got several touches here, and it's in this big pattern. And look, today it's trying to break over this, but of course, back to the old support and resistance. Trend lines, moving averages are one thing. Support and resistance is a whole nother thing. And so it's going to be interesting to see if this makes a run for this resistance area up here. Pretty constructive looking pattern. Yesterday was a pretty big update for Microsoft. So keep in mind that the overall market is somewhat, well, it feels overvalued to me, like overvalued. As far as being overbought, well, let's go back to the weekly chart here. Is it overbought? Well, that's a good question, because hang on, one of these charts I have the RSI. I wanted to look at the weekly RSI. Here we go. There's what I was looking for, the weekly RSI. Interestingly enough, it's, and there's a divergence right there. The market, was way more overbought in July. Right here, I can put my right here. The market was way more overbought, and then it had a pretty good sell-off. And I wouldn't read too much into that one, but now the price itself has made a new high, but the RSI wasn't able to get over 70. So there's your divergence. And of course, I could draw a trend line across those and point out that there's a divergence on the RSI. So is the market overbought? Well, it's interesting because it looks like it tried to It tried to break above, the RSI tried to get above 70, but it didn't. And now it looks like it's turning back down. And of course, this is on the weekly, so that's something to keep in mind. Anyway, I said at the beginning that I like to keep these shows at 30 minutes, so I'm going to stick to that. So thanks for tuning in. I'll see you back here, same time, same place next week.